Here's a question for you. Have you ever looked at your bank account and wondered where all the money went? You're making money, maybe even more than before, but it looks like you're constantly feeling broke. Hello, and welcome back to the Moneymatics podcast, the show where we talk about all things money and finances and how to build wealth and go from living paycheck to paycheck into financial freedom. And especially we talk about that for Africans living in diaspora. On today's show, we're going back to basics, the very foundation of wealth building. We're talking liabilities and assets. So today we're talking about liabilities, assets, and why understanding that can be the very reason why some people would make wealth, become financially free, and why other people will continually feel financially stuck. Because once you understand this very well, the difference between assets and liability, when you understand it into your bone, you begin to shift your mindset from that which will keep you stuck financially into wealth building. So let's get right into it. What is an asset? An asset is something that puts money into your pocket or increases your net worth. And what is a liability? A liability is something that does the opposite. It takes money from your pocket, it removes money from you, and it's an obligation that you already owe in the future and you have to pay it. It costs you to keep this liability. So for example, an asset can be your investment, your rental property that you own, and a liability can be your car loans, the credit card payments, and all of these things. Let's start with a simple example. Let's take the case of two friends. Emmy, on one hand, bought a car. It cost her $30,000, 300,000 Swedish crowns, or 30,000 pounds, pick whatever. And our friend, Yetunde, also buys a car, the same amount of money, $30,000, 300,000 Swedish crowns, and both of them bought the car at the same time. For Kemi, she's using it for personal use, and it costs her money every month. So for her, that is a liability. Yetunde, on the other hand, uses the car for rentals. She put it in a car sharing pool and she makes money from it. Maybe she even does Uber with it. And every month she makes enough money to cover the payment for the car and also make some money. She makes $200 every month extra apart from paying for the car. It's the same thing both of them bought. But for Kemi, the car is a liability. For Yetunde, the car is an asset. So it's not really what you buy. It's about what you do with what you buy. You get it? The car is not a problem. The question is, if Kemi bought the car thinking that it's an asset, then she's delusional. Then she has a problem. Then she does not understand these basics we're talking about. Meanwhile, Yetunde on the other hand knows that a car is not just something that is costing her money, but it's also making her money. The tricky part is that many of us have been sold this lie. We buy liabilities because we think that they're status thing. They make us feel like we have money. Most people, let's be honest, most of us, middle class people, working in a 9-to-5 job, we deceive ourselves or we think that we have assets. Meanwhile, we only have liabilities. We have things that are draining our pockets. Most people stay broke because they have liabilities that look like assets. So understanding this is something that the wealthy understand. Before they spend money, they ask themselves, is this going to make me money or not? Now, I am not saying that you can never buy things just for pleasure, but the problem arises when your liabilities are way more than your assets. And so you don't have cash flow. Money is coming in, but the money is going out faster than it's coming in. Let's take, for example, even the house that you live in. I know we talk about your house as an investment a lot, but let's look at it closely. Your house that you live in is not yet an asset until it starts making you money. It's an asset only if it's making you money. If it's costing you money, it's really still something that is taking money away from your pocket. That house, that apartment becomes an asset only when it starts making you money. And this is talking economically. We can argue about different things, but it's increasing in value and all of that. Yes, it is increasing in value, but that value is inside the asset. It's not making you money. The value is only when you sell it or maybe when you rent it out. That's when it can be an asset. So let's be honest. We tell ourselves, My home is my biggest asset. And for many of us, it is still where the bulk of our net worth is. But that house is costing you a mortgage every month, utility bills, it's costing you a lot of money every month. So it's really a liability until it starts making you money. Maybe if you're renting out a part of it, or if you're doing something else with it, then it could be an asset. Or the day you finally sell it and you're able to release the value in that house, then of course it becomes an asset. But on a monthly to monthly basis, it is something that is costing you money. The wealthy understand the difference between liabilities and assets very well. When they buy something, they think to themselves, is this going to make me money or is it going to cost me money? They focus on cash flow, money coming in versus money going out. If the money you have coming in is lower than the money you have going out, then you're really living a liability life. Your life is liability heavy. It's liability dependent. What you want to do is to shift from being a person who lives a liability living to a person who lives a wealth building life. So here is a thought experiment that I want you to try. Every time you want to make a big purchase, ask yourself, is this a liability or is it an asset? Or if this is a liability, how can I turn it into an asset? Is there anything around this thing that I can turn into an asset for myself? This question can change your financial trajectory transformationally. It can be the reason why in 5 years' time, in 10 years' time, you're sitting there and you're smiling because you made decisions that change the course of your life, the course of your family, the course of your generation forever. It might look like, oh, stop being dramatic, Bobby. What is that? Just because I want to buy something, I ask myself that question. Yes, do not underestimate the power of these purchases we make and what the money could do if we were actually investing them and not just assuming that we are living life. True wealth builders are stacking up assets. They're buying the shares, they're buying the stocks, they're buying the funds, they're buying rental property, they're making their money work for them. So who are you going to be? Are you going to be the person that makes your money work for you? Or are you going to be the person that money just goes and leaves your pocket every time? I want you to do an exercise, right? I want you to list out your major expenses every month. And then ask yourself a brutal and honest question. For every item on that list, ask yourself, is this an asset or is this a liability? And then group them. Group your biggest purchases, your biggest expenses every month, every year, and then see where is it tilting. If we put it on a scale, will it tilt towards liabilities or will it tilt towards assets? When you do this exercise, you will start to notice a pattern. And that pattern, unfortunately, my friend, is the pattern of your life, is the pattern of your financial life, is a pattern that can map, that can tell me where you're going in 5 years' time or in 10 years' time. And then looking at this list can help you to, once you identify the things that are draining money out of your pocket, you begin to shift your mindset. You begin to ask yourself, what can I do to make sure that I shift from being liabilities heavy to moving into asset building mode? So now that we've talked about that, how do you move from liability living into asset building mode? Number one, pay yourself first. I don't know how many times I have to say this on this show, and I will say it 1,000 times if I need to. Pay yourself first means that you automate your savings. You make sure that you are saving something from your income every time. Paying yourself first is not buying that fancy bag that you like. Paying yourself first is not buying that PS5 or the next big gadget. Paying yourself first is money put into a savings account, money put into investment that is going to yield money later or that is yielding money now. Number two, make it a habit to buy things that add value, to use your money to buy things that add value to yourself. I was following, there's a lady in Nigeria called Financial Jennifer. I've been laughing at some of our reels that she's been doing. She goes like, I'm going shopping. And what she's really doing is she's sitting before a laptop and actually going shopping, buying shares. She's actually shopping stocks. It's funny. It's a funny reel. It makes you click it. But then it's really that. Make it a habit to shop assets and not just liabilities. Number three, we've talked about this before. even on the other episode where I was talking about be an income generator, think of your expenses, look at your expenses, those things that are on your liability side, look at them and ask yourself, can I, one way or the other, turn this into something that brings me money? If you some of you have like 2 cars in your garages, ask yourself, is there something I can do with them? And can I do something with this? Some of you live in big houses. You don't know what to do. You have an outhouse. You have something. Can I maybe rent it out occasionally? Or can I turn a room in my house into something that's generating me money? I have a friend that turned a room in her house into an income generating space. She's doing things, fantastic things. She's doing fantastic things with that room in her house, in her apartment, turning it into a business. So ask yourself, these things that drain money from me, is there a way to turn this into an asset, something that will generate income? Number 4, leverage good debts. Yes, not all debts are created equal. We've talked about this before. Bad debts exist. Most debts, that most people get into are bad debts, let's be honest, but there are good debts. Good debts can be, you take a student loan to go get an education that would give you a skill that would make you earn more. You probably take a business loan and you think carefully and use that loan to generate more income for your business. Those are good debts. Or maybe you take a loan and you buy something that you can use to generate income. To leverage good debts where you can, but be very careful that you're actually thinking well about how that debt can be a good debt. And remember, wealth is not built overnight. Wealth is built with consistency, one purchase, one thought, one decision at a time. Every time you choose an asset over a liability, you're building that wealth that you want to see. So let's wrap this up. Assets help you grow wealth, while liabilities take wealth away from you. They drain you of wealth. So make sure you do that exercise about knowing your own balance sheet. What is your net worth at the moment? Do you have more liability than assets? Make that list and then ask yourself, what can I move from the liability column into the assets side and do something about that? Remember we said wealth is not built overnight. It's built one decision at a time, decision over decision. And every month, make a decision to ask yourself, what can I do differently today? And then I want you to leave a comment under this video in the comment section about what you're going to move from reliability into an asset class. And let me know if you do this exercise and what it tells you about your finances and what you're going to do about it going forward. And that's it. It's a wrap. Now, don't forget to subscribe. Don't forget to like this video. We have many episodes, many fantastic episodes that we've done. Make sure that you go and watch them, put on the notification button, and let's build this community, like I said, together. And until I come your way again, this is the Moneymatics podcast. See ya.